Good afternoon, everyone. Thanks so much for joining us today as we talk about the comprehensive tax reform bill that passed both houses last Friday. Some of us know that bill as the TTF, Transportation Trust Fund bill, but I want to take some time today to talk about the landscape that led us to that bill and why we call it a comprehensive tax reform bill. So let me start by setting the stage and begin by clearly stating that, of course, NJBIA would never be happy supporting a 23-cent gas tax increase. Anyone who has been a member of NJBIA for a long time knows that NJBIA, first and foremost, is not in favor of any type of a tax increase. In fact, our agenda is about affordability and proper tax reform. However, the gas tax increase was inevitable. This was made clear to us over the past year, if not the past couple of years. We knew that a gas tax increase was coming, and we knew that the votes were there in order for it to happen. Having that inevitable change at us, we knew that we needed to move immediately to seek comprehensive reform on the other side. Now, why do I say that we knew that it was made clear to us that an inevitable increase was coming, and why 23 cents, which is a significant increase? I would suggest that today New Jersey residents are being made to make up for the decades of poor policy making when it has come to New Jersey's infrastructure. Over the last few decades, we've had waning investment of our dollars in infrastructure. We've had a lack of accountability and prioritization on our projects, and we've had a consistent rating of the Transportation Trust Fund by both Democrats and Republicans dating back over 2 decades. Yes, infrastructure is at an emergency level in the state of New Jersey. Let's not fool ourselves. We see it as we travel the roads every day. We see it on the bridges that are closed. And on roadways and bridges, you do see it. It's obvious to us. We don't see the infrastructure that lies below it, which is crumbling as well. And candidly, we can no longer leave this investment to future generations. So 23 cents is significant. It was inevitable. And BIA then immediately, as I said, jumped to ensure that we get comprehensive tax reform on the other side. So what did we do by way of that comprehensive tax reform? We focused specifically on taxes in the state of New Jersey that our data has shown and our members have validated were significant reasons why New Jersey residents and businesses leave the state of New Jersey. In particular, I want to focus on the total elimination of the estate tax, which by January 1 of 2018 will be totally eliminated in the state of New Jersey. And I also want to focus on the gradual increase of the state income tax exclusion on retirement income and pension income, ranging from $15,000 to $75,000 for single taxpayers and from $20,000 to $100,000 for couples filing jointly by 2020. These 2 areas, time and time again, if not every time I'm out speaking with our members, are 2 significant reasons that New Jersey businesses tell me and tell BIA cause them to contemplate leaving the state of New Jersey. Our 2016 Business Outlook survey that we released earlier this year, within that survey, 2/3 of BIA members told us that they take estate and inheritance tax into consideration when they are doing their business succession planning. If you could all please mute your phones. We do have some folks who aren't muted, so I think it's going to make it difficult for others to hear us. So let me repeat that. On estate tax, 2/3 of New Jersey business and industry members who participated told us that they take estate tax into consideration when they do their business succession planning. And 2/3 also told us that they will not make New Jersey their domicile as they consider retirement. Therefore, relief on estate tax and increasing the threshold on retirement income is significant to keeping residents in the state of New Jersey. Now, I talk about our data. Many of you are aware that NJBIA did an outmigration report earlier this year, and we learned that $18 billion left the state in the past decade. But what we did is we dig down a little bit more on that so that we could give a real example of if we kept just a fraction of that in the state, what would that mean? So we looked at 2013, and in 2013 alone, $3 billion left the state of New Jersey. In order to ensure that we were looking in a conservative manner of what we could have kept in the state, we ran a query for people who left the state who were 45 years of age or older. 20% of those people, so 20% of those aged 45 years or older, If they would have stayed in the state of New Jersey in 2013, New Jersey would have kept $500 million in adjusted gross income, and economic activity would have seen an increase of $300 million. Okay, now again, keep in mind how conservative those numbers are, but what that impact to New Jersey's economy is. So I would like to suggest that while we know many residents of the state of New Jersey feel that the current package that was passed by both houses last week doesn't today, right now, give them immediate tax relief, this type of reform in estate tax and lifting the threshold on retirement and income tax will benefit New Jersey's economy, which in turn will benefit all the residents of the state of New Jersey. Yes, it's going to take us some time to appreciate that, but what is so significant is sending a message today that those taxes will be in effect over the next couple years. In particular, the total elimination of estate tax by 2018 will cause New Jersey residents to stay here and invest here. This is what our members have told us. If a message is sent that there will be reform in these taxes in the future, they will reconsider leaving the state of New Jersey. Again, can I ask everyone to please mute your phone because we're getting a lot of feedback. Thank you. So I could continue to go into some detail. I want to mention two other parts of the reform, and then I want to take some questions. In addition to the elimination of the estate tax and the increase in the threshold, which those two actions, again, now make us competitive to Pennsylvania and New York, which are our #1 and #2 out-migration states. But in addition, we will have a reduction of the state sales tax from 7% to 6.875% in 2017 and to 6.625% in 2018. We will also have an increase in the earned income tax credit from 30% of the federal benefit increased to 35%. That benefits lower wage earners. And there will also be a provision that provides a $3,000 tax exemption for veterans who are honorably discharged from the military or National Guard. So that is a review of the comprehensive tax reform bill, and now I'd like to take any questions that you may have. Now, I know some of you may not want to ask questions on the line, so I want to provide you my email address, and you can send me a question directly, or you can also go on our website, and there's a button called Tell Michele, and you can send me a question or a comment from there. My email is ms, as in Sam, IEKERKA, at NJBIA.org, and our website is www.njbia.org. Okay, I want to thank you for participating. It is really important that when we have significant policies such as this, that we take time to engage our members and provide you the opportunity to ask us questions. Have a great afternoon.